Guys, welcome back to another video. So this is going to be a quick one because I'm heading to the airport shortly off to Sri Lanka, which is a really long flight, but a trip I'm really looking forward to. I want to talk now about how I'm invested in SpaceX. Yes, SpaceX, the private spacefaring rocket company owned, run and managed by Elon Musk, and how you as a retail investor can invest in SpaceX too. So, when we look at investing normally, we look at stocks and crypto and other assets that are available to us on the public market, the stock market. So, in the US, typically New York Stock Exchange, NASDAQ, et al. In international markets, the FTSE in the UK, for example, or the Shin Nippon in Japan. And these are markets where companies who were once private, privately funded, privately owned, then became public by issuing a public offering and entering into the public markets. Those regulated markets that you and I then go and buy one share of Apple or 50 shares of Amazon or whatever it may be. That's how most people around the world invest. And really and truly, that's how retail investors invest because, put it no other way, that's the only way you can access these investment vehicles, these companies, and ultimately build up your portfolio of equities. Now, how do I and you get access to private companies and some of the most exciting companies around the world? I want to talk about a specific investment vehicle called an investment trust. Now, this is not financial advice. I'm not by any means an accounting expert or a financial services expert, but I can talk to you about what I'm doing and how I'm accessing companies like SpaceX and investing in them before they become public. So let's look at the investment vehicles you typically got. You've got equities, where you buy a stock of a company, public market, like we've talked about. You have ETFs, exchange traded funds. These are usually based on a basket of companies or themes, and you'll then go and buy, for example, an S&P 500 ETF, which will give you access to 500 of the top companies in America, and you're only investing in that one thing to access all of those companies. You have traditional funds and mutual funds. These are typically what are called open-ended. So you'll put money into those funds. Think ARK, for example, by Cathie Wood and the ARK K Innovation Fund that's become so infamous over the last couple of years. In that type of fund, you and I put money in. We then give that money ultimately to Cathie Wood and team to then go and invest in companies where they think they can invest in those to outperform the market in general. In those types of funds, there are some specific things that matter. So when you put money in, they have to invest it immediately into companies. And when you decide to sell the fund, they also have to sell down in order to fund you back. They also can't do what's called gearing or obtain leverage. They can't borrow money to then go and invest in companies. And what that means is that whilst it's great, it's actually a really good way for you and I to get access to great research and great insight into some companies that we may not think about investing in individually. It also means there are some limitations because, one, in a good way, they're regulated, but two, they're very limited in how they manage that money. Now, there's another vehicle that I personally invest quite heavily in. I invest quite heavily in it, one, because typically, historically, there's been a great record of outperformance, but also they're able to do some things creatively that ETFs can't do, that mutual funds or public funds can't do, and you can't obtain via the public markets. So I want to talk about investment trusts. Now, you may not have heard of these investment trusts, especially if you're based in North America or markets really outside of the UK, because investment trusts have really been a vehicle that's been made infamous and popular in the UK. Investment trusts, for example, like Scottish Mortgage Investment Trust, are infamous, especially over the last few years, for investing in companies like Tesla, outperforming dramatically, for investing in companies like Amazon over a decade ago, outperforming dramatically. So, why investment trusts and why are they more interesting than some of the other types of investment vehicles you might have access to? First thing is, we talked about open-ended. Well, investment trusts are closed-ended. So what that means is they can do things like hold cash. They don't have a mandate to sell companies just because you're selling down on your investment in an investment trust. And they can also borrow. They can have gearing or leverage so that they can borrow money to ultimately go and invest that money and hopefully outperform what would otherwise be a limited return. Now, the thing that makes them really cool, investment trusts almost act like private equity or venture capital when it comes to private markets. So if I look at Scottish Mortgage Investment Trust as an example, yes, invested in Tesla, yes, invested in Chinese companies like Tencent, yes, invested in other public companies that we all know very well. But they're also invested in SpaceX. They're also invested in dozens of companies that are private, companies that you and I have no means of accessing, investing in, even if we believe that SpaceX is going to be a multi-trillion-dollar company one day. You and I simply cannot call up Elon Musk and say, hey, I want to give you £5,000, $10,000, and I want to invest in the future of SpaceX. You just can't do it. But through an investment trust, through you buying an investment trust, a unit of Scottish Mortgage or a unit of any number of other investment trusts that are out there, you're able to then entrust your money to those money managers and have them go out not only and invest in the public markets based on whatever philosophies and themes they may have, but also the private markets. Now, why is that important? Well, we've talked about the fact that you can't access them yourself, but beyond that, you're also able to invest much, much, much earlier in high conviction plays. So we talked about Tesla. For the most of us, we've only been able to access Tesla as a public market company. Imagine you could have invested in it when it was private, when the valuation was in the fives of millions, tens of millions. Imagine your returns then. Now, investment trusts aren't bulletproof. Investment trusts are actually listed as an equity in their own right. And so they move up and down just like any other stock or share would. And so you do have to understand that your capital is at risk. But when you have high conviction in the research philosophy, the investing philosophy of a particular money manager, you then have to look beyond that and go, what does an investment give you access to? You see, Cathie Wood can talk about innovation with Ark K, but Tom Slater can talk about innovation with Scottish Mortgage. One will give you access to a set of funds, and fair play to Cathie Wood. Ark typically publish all of the information around their trades on a daily basis. That's brave. On the other hand, you have somebody like Tom Slater and the team at Baillie Gifford who quietly, conservatively go about their business, also on the theme of innovation and growth and disruption of the future. This time they're able to be really creative around how they can deliver returns for investors like you and me. If you want to have a broad, diversified portfolio, absolutely, equities, ETFs, funds, crypto. If you want to add to that with a little bit of exposure to private companies, especially when they're private companies that excite you about the potential and the future that those companies might have, I'd recommend taking a look at investment trusts. I'll link in the description below to a couple that I rate very highly, some that I'm personally invested in, and I'll leave it to you to research. And I say that sincerely. Please do your own research. Investment trusts aren't for everyone. There are fees involved, there are charges involved, your capital will be at risk. But in order to get exposure to early stage companies that you otherwise wouldn't, I think investment trusts are a really unique and a really powerful vehicle for retail investors like you and I. That's it for this video. I will likely produce one or two more videos whilst I'm in Sri Lanka. Probably not the same background, maybe not quite the same quality, but I really do look forward to your feedback and your thoughts, especially those of you who are invested in investment trusts. Happy to take questions as well. But for now, that's it for today's video. Take care.